Hey everyone, my name's Andy. My channel is Finding Value. I was looking through the comments section and someone asked a question, and I think it's a very important question to understand. So that's why I'm responding with a video. The question is, if gold goes higher. So I'll start with the uranium. So uranium, this is I have a chart pulled up here. It's the uranium to gold ratio. This is history of uranium to gold ratio. And what happens is when the ratio goes up, it's at 62-1, which is off this chart right now. It's way up here, which means gold, 1 ounce of gold can buy 62 pounds of uranium. That is what it means. So what does it mean if gold were to go up? So what happens is over time, this ratio is going to compress against gold, which means that uranium is going to outperform the price of gold. So if gold goes up by 2, it doesn't mean that the ratio is 62-2. No. What that means is that the ratio, what most likely will happen is if gold goes up, uranium's going to go up faster than the price of gold. Think of gold as an accounting mechanism for money in the system. Money is going to rotate into different sectors from other sectors. So when the market conditions change, that's why I continue to talk about market conditions and watching market conditions. Market conditions is real estate. When real estate will continue to go higher, inflation is going to come into the system. It comes from residential real estate. Interest rates is basically the balance between supply and demand of loans, if that makes sense. Interest rates go higher when the demand for loans comes rushing in. We should be having higher interest rates right now, but they have QE, and QE, the purpose of quantitative easing is to buy bonds to lower interest rates. They're manipulating it. So what's going to happen is the demand's going to rush in to buy these bonds, or to have loans, and the interest rate's going to continue to stay low, which means you're going to have a bigger real negative rate. Real negative rate is the inflation rate is higher than your 10-year yield. And when the inflation rate goes higher and higher and higher, and they continue to buy bonds to hold the interest rates down, that difference between the yield on the 10-year and the inflation rate gets larger and larger. That's what pushes gold higher. Because people are they're going to sell their bonds and they're going to move into gold and other commodities. When that real yield continues to go higher, and it's going to go higher at faster rates as home prices go up more, and loans come into existence from commercial banks against new homes being built in an expansionary phase of real estate. That's the conditions for an inflationary environment. That's what's pushing the tailwinds behind us with our investment. So when gold goes higher, uranium's going to get repriced to gold. That's where that big leverage comes from. I did a bunch of other videos on how leveraged we are to the price of gold, and especially the Dow. So Dow's going to outperform, or gold's going to outperform the Dow, and uranium's going to outperform gold. And if we're in an inflationary environment, gold's a target that's moving higher. So uranium's going to be going up at a faster pace than gold, and gold is moving up, if that makes sense. We're going to see a massive move. This isn't going to be a small 5% up days. This is going to be repeated day after day after day after day. And what we're watching is the ratio to tell us what the value is against gold, because gold's our marker. Gold is the gold standard. That gold. And I think this is where it gets very difficult for a lot of people. We're using dollars as our standard. You got to throw that in the garbage. Gold is what we've used as a standard of measurement for thousands of years. That has been our money. Uranium is going to outperform gold, and gold's going to outperform all that other stuff. So we're getting a leveraged play on gold with uranium. So if gold goes up 2 times, I'm expecting uranium to go up at a faster pace and compress the ratio against gold, which will take a much, much higher price of dollars. if that makes sense. So I'll give you one scenario here. I'm expecting that 62-to-1 ratio to compress at the end of the cycle to, let's say, 5 to 5. All right? Gold, I'm going to use very easy numbers here. 2,000 goes to 4,000. All right? So it went up 2 times. I expect this to go 5 down to 5. So that's 4,000. I'll pull up my calculator here just to show you what I think the price might be. I'm going to pull this over here on your screen. 4,000 divided by 5 is $800 a pound. Does that sound ridiculous? I don't know. The inflation's accounted for in gold. The rest is the supply demand and the money flowing into the sector. That is how you calculate it. So it's not a 62-to-2 ratio. It's a 5-to-1 ratio because we get the compression and we get the inflation adjustment through gold. And that's where you get your massive purchasing power gains. That is why it is so important to understand value versus price. This is showing you value. This is what uranium should be priced at a market top. This is historically what uranium's been priced at. Now, I'm going to give you another scenario. What if we get to 3? And what if gold gets to 10,000? Now you're at $3,333 a pound. Divided by $30 a pound, that's a 111 times increase in the price of uranium. I'm not telling you that this is what's going to happen. What I'm telling you is we are so far undervalued. It is ridiculous. And when you look out there in the deficits that we have in the future, and we've got gold as our inflation gauge, we're going to get repriced to all this stuff. All this money is going to flow back into these sectors, and it's going to change in a big way. And these companies are leveraged to that. Keep that in mind. So I'm not saying that the price will be that. What I'm telling you is, historically, the price is probably going to be between $800 and 1,000 something, 1,600 maybe, $800 and $1,600, a big range. Depends what that ratio compresses to, and depends how high gold goes to. Now, if we get a very, I don't think it's going to be mild because we have the home shortage and the millennials coming. It's going to be a big move. That's my opinion. I wanted to make sure everyone understands this stuff. The more questions you ask, the more videos I can get in front of everybody, and I'll try answering whatever questions you have because this is extremely important to understand. And at first, when you first hear this stuff, you're going to say this man is ludicrous. He's freaking ludicrous. There's no way it's going to go to $800 a pound. Well, you might be surprised. Depends how much inflation enters the system. And that's what you're missing, is that inflation entering the system and everything getting repriced. You know, you have to think, you know, maybe you're paying $500 a month to heat your house using natural gas in a relatively mild, somewhat cold climate. You'd be surprised what inflation does. And we haven't lived through an inflationary period like this for a very long time. And maybe it doesn't get that bad. Maybe gold only goes to 5,000. And then if you do the math for 5,000, and I know a lot of people probably would want to hear this. So let's say it goes down to 5. So 5,000 divided by 5 is $1,000 a pound of uranium. So please, if you guys don't understand this, leave more comments. I really want to make sure everyone understands how to use ratios and what it means. Thank you for asking these questions. I'm more than willing to answer whatever you guys have. Leave in the comments if you don't understand this. This is exceptionally important when investing in this environment, and it gives you the holding power to hold these things through thick and thin, because if you know how much upside there is on these, you will not sell. This is dirt cheap valuations. Thank you for listening. This is Finding Value. Subscribe if you haven't subscribed. Thanks.